All right. Hello and welcome to everybody who's joining in here today. So I'm trying a little bit of a. So this is something that I am trying out. So I'm not really sure how well or badly this is going to work out. But the whole agenda was that I wanted to have a discussion around the physical world meeting the digital world and how a lot of new technology is actually helping people with kind of building wealth on that front. And no, we will not just be talking about NFTs. I know a lot of people assume when we think of blockchain and the physical world, immediately the one use case that comes into our mind is on the blockchain front. We're not going to be talking about that. We will touch upon it, but not so exhaustively on blockchain NFTs alone. But before we get into today's topic, I want to extend a very, very warm welcome to everyone. And I see some of my really, really good LinkedIn friends as well. Vanita is here, even though I know it is so late for you, Vanita. Thank you for joining in. Shivam, Arush, Rahul, Yogesh, Abhishek, Sophia, Arun, Costa, Abhishek. Abhishek, I would love to have you up on stage again. I'm sure this is going to be such an amazing discussion with you in it, considering you have quite a good understanding of the financial space in general. Then there's Tarun Kumar, Shamal, Abdullah, Aman, Ankit, Devendra, Blue Seas. I'm not sure if that's your real name. Venkatesh, Hanit, Harikrit, and hi Sanju. It's been a while. I should chat up with you sometime. And Dan, my favorite person from Clubhouse. So welcome to all of you. All right, so quick introduction on audio rooms in general. It's a little different from how we are used to on Clubhouse or other social audio spaces. If you have a question or if you want to add value, you will have to raise your hand, and the raise hand button is there right at the bottom of your screen on the bottom right side, I believe. So you'll have a react button right next to that. You'll also have a raise hand option, and once you come up on stage, you're automatically on mute. So you will have to come up, unmute yourself when you want to speak, and before you are able to speak, you will need to give permission to your application to use your microphone. That said, I would also like to let everyone know that this is being recorded currently. So, in case you have issues with it being recorded, then apologies in front. But I would really, because there's so much value that comes out in all of these audio rooms, I would love to revisit these sometimes, which is why I'm recording it. I don't know how it's going to work out because it's the first time I'm trying to record. So, let's see how that works out. All right. So, a brief background on how I thought of this topic or why I thought this was something interesting to discuss about. Well, all of you must be aware that JP Morgan, which has anyways been one of the bigger banks that has always been very digitally savvy, has recently bought land in the metaverse. So that has really sparked like this entire debate on what is going to be happening next. Like, how much is the virtual world just going to be a representation of what's there in the physical world, or is there going to be a lot more to add to that as well? So that's where I started exploring on this topic, and it kind of gave me an. I was honestly just someone who was crypto positive, but a little conservative, not so gung ho and fully into it. But all of these kind of gave me like a good sense of what is happening in this space. So, and believe me, I was quite surprised at the way a lot of physical assets can get into, can use blockchain to help a lot of people create wealth. So that was where I came into, decided to kind of talk about this topic. But before we get into that, I kind of structured the flow in a way that we would first start off with the types of assets, and then move into. So this is like the flow that I broadly have. We'll start with the types of assets. We'll try understanding a little bit about digital assets in general. Under digital assets, there's a lot of confusion about coins and tokens and what is what. So that's again another thing that we will be trying to touch upon. And then we'll get into real estate as an asset class and how that can benefit from the blockchain world. So, all right, I see that there's Binati here on the video live, and I'm so glad, Binati, that you are here. But as always, I love hearing you and love hearing from you. So, I would love for you to join our audio room as well. because I know you'll have some amazing points over there. So, yes, with that, let's get into it. And so, first things first, welcome on stage, Sumit. And I see that we also have Yogesh on stage with us. So, welcome, welcome. Would you do you have a point that you would like to make on this, Sumit? Sumit, you'll have to press on the unmute button, the mic button that's there right at the bottom, and then give permission in order to be able to come up on stage. I mean, actually, you're on stage, but to actually speak. Sorry. No, all right, Sumit, we will circle back to you. Meanwhile, Yogesh, hello. Am I audible? Doing a quick sanity check over here. Also, the LinkedIn audio room is by the same name. It is Can Blockchain Be Used to Build Wealth in the Physical World? Let me see if I can quickly link it to you people here. Um, wow, I can't toggle between windows. But all right, Yogesh, if you would like to make a point, then definitely do feel free to unmute. But we shall move on in the interest of time because I've kept it for a very short segment. We shall move on to the types of assets. Now, I don't think I really need to be talking about this much, considering how much of information there is already out there. But still, let's just spend like a brief minute or two on the types of assets that are there. So the one that most of us Indians, and I'm coming from an India perspective, not a global perspective, but one that most of us Indians are familiar with is savings. And I know that our grandparents, like people right from our grandparents' time, have been putting money into FDs and PPFs and stuff like that. And on this front, on the types of asset front, I would love it, Abhishek, if you could come up and throw some lights on which is the best sort of asset class in your opinion, and how should people allocate between these asset class depending on their risk their kind of risk weights over there. But yes, so the one that most of us are familiar with is savings, your fixed deposit, the recurring deposits, or even just the money that's sitting in your account earning very meager interest. So that's like the lowest return sort of asset class that's there. Then the next thing that is there is on the so something that most of us have been exposed to in the last 2 years especially is on the stock side. So stocks as in the equity stocks, so you may have either directly signed up on a brokerage firm and then traded in stocks, or done it through mutual funds of sorts. So that is again another way that you could have invested in stocks, and these are typically slightly more higher risk. Actually, when you compare it with deposits, it's extremely high risk. But yes, you also get much better returns. Like for example, just to give like a sense of the two asset classes that are there, for savings, you were getting barely 4 to 5% returns over the last 2 years. But if you had in the same period put it in a blue chip company, and I'm not talking about the risky companies that keep the small chips ones that keep going up and down, you would have gotten a reasonable, like my portfolio right now stands at 33% over the last 2 years. So you would have made a decent sort of a return over there on the stocks asset class. Then another one which is slightly more complex to get into, which is why most people do it through mutual funds, is on the bond side of it. So you could have corporate bonds, or you could also get into government bonds sort of a thing. That is again another asset class. Then there is of course real estate and gold, which have been like traditional asset classes for generations in India. And finally, we have these newer asset classes that are coming in, which are the digital assets. So we have NFTs over there. But really, that is not the only form of digital assets that's there. When we think of digital assets, there are a bunch of different types of assets. So, of course, there is the underlying, and uh, so let me just rewind and kind of think of digital assets from a first principles perspective. So about 10-15 years back, there were still digital assets, but they were literally just a digital representation of something that was in the physical world, unlike what is happening currently, where you literally have a digital sort of a universe living out there, and you have assets over there as well. So those have been around for a very long while. I think the prime example would be the stocks in dematerialized form, which have been around for 20 years now in India. So that is one. Oops, I see I have someone on stage with me, which I have conveniently ignored. Hello, Krishna. I'm so sorry that I did not notice you before, but welcome. And if you would like to add something on the digital asset or even on the physical asset side, the stage is all yours, Krishna. You will need to press the mic button right at the bottom, and then give permission on top of that in order to be able to actually speak on stage. So, all right, Krishna has momentarily dropped off, but I hope he will join us back. But okay, so when it comes to, so that was what was happening about 10, 20 years back. But now, with blockchain coming in and with things like the metaverse coming in, there is like a new set of assets that are there over there. And one of the most common asset that we all know of are the cryptocurrencies or the coins that we have over there. Hi, Binati. Finally, so good to see you in the audio room now. And welcome on stage. How are you doing, Binati? Awesome. Oh, yes. Oh, yes. Unfortunately, yes. And that's like kind of, I wonder why. Because India, when you see, when it comes to digital inclusion in the financial world, India has kind of been in the forefront of that. But when it comes to talking about these new asset class, somehow I think we're just very risk averse, so we kind of take a back step. And because of that, I think a lot of innovation that's there kind of is, I wouldn't say it's lost, it's just that we're missing out on those opportunities. So yeah. Absolutely. True. Oh, very, very true. Very, very true. And that's the whole purpose of why I decided to, do this and kind of structured it in a way that it at least made sense to me. So I'm hoping it makes sense to the others who are there in the room as well. So thank you so much for that input, Vinati. But all right, so what was I talking about? Yes, thank God I have like a LinkedIn video live going on as well, because I literally have my pointers there and the banners over there. So makes my note preparation so much more easier. But okay, so when it comes to digital assets, there are two very, very popular sort of assets that are there. One is the coins, and the other one is tokens. So when we think of coins, classic example is Bitcoin. So and very, very so a lot of people use coins and Bitcoin interchangeably, but you should note that they are not the same. They're not one and the same. They do have a slight nuance, a slight difference over there. So when we talk about coins, they are built natively on the blockchain. So you will hear a lot of Bitcoin enthusiasts, Bitcoin Nazis saying that the blockchain cryptocurrency is not really a discovery of the blockchain. Bitcoin was what was the discovery of blockchain, and that was the first and foremost discovery. So everything else that comes after that is like meh. Anyways, let's not get into that argument. But so that is what coins are about. But then, so what are tokens? Tokens use a bit of existing blockchain technology and layer on top of that. So you have the blockchain and the coins, which are like kind of interlinked over there, and then you have one layer on top of that, which are the tokens which are issued over there. So what happens in this case is that for making one coin, you need, because it needs that much amount of, it needs a lot of complex computation in the back end for you to actually mint that coin. And the way that you can distribute coins is only by minting it on the blockchain for which it was designed for. and that requires significant amount of computational power, significant amount of energy, which also means that not every Tom, Dick, and Harry like you and me can go ahead and mint our own coins. It requires that much of scientific computer knowledge, basically. But tokens are not like that. They are much, much easier to create, which is why we're seeing so many NFTs being created. By the way, if any of you are recording this, please do not share this as an NFT. I will sue you for it, but jokes aside. So NFTs are like much easier to create, and they are typically distributed through what is known as an ICO, or an initial coin offering. So you can buy whatever tokens you want using those coins. So they're exchangeable on that front. But yes, that's kind of the difference between coins and tokens. Coins also, it is coins are more peerless, I would say. You can do it like, if say Binati and I are on the same blockchain, both of us can transact without having to go through any other intermediary. Whereas for tokens, you will need to have like someone issuing those tokens to you, so you will have an intermediary, which is where we see a lot of these NFTs having stupendous amounts of gas fees related over there. So that's like a very, very basic sort of a difference between coins and tokens. Now, why this is important is because they can both be assets. Tokens, because it is so a lot of these tokens are linked to, they were previously being linked to physical assets as well, but they're now also being linked to assets in the digital world. So you have a bit of pricing coming in there. So whenever there's pricing, there's going to be that demand supply that comes in over there. Whereas for coins, we have a more economic way of, and a lot of people are going to dispute this. So but then we have a much better way of valuing, quote unquote, valuing these coins. I know people are going to say that no, Bitcoin has no inherent value and stuff like that. But trust me, there are econometric ways of actually getting to the value of Bitcoin. So anyways, that's a separate discussion. So that was what I had to talk about, coins versus tokens. So now moving on, was what I wanted to talk about, some of the physical assets which we were just, discussing a while ago over here, which is, and one of the biggest asset class in India, which takes up a lot of our, the in terms of the value that is there, is real estate. But unfortunately, if you see the historical real estate yield rates that are there, the rental yield rates that are there, they've been abysmally low. So I just before joining in this session, I did check out the rates that were there for the last 10 years. No, what was it? 12 years. Okay, so this was from 2010. So the last 12 years, and the rate has just been slightly above 3%. What has been the inflation in the same period? 6%. So you literally lost more than half of your wealth if you did put it up in real estate. But that is only for like the rental part of it. There is one segment of real estate which is giving quite good returns. Almost for the same period, it gave almost 13% returns, which was on the commercial real estate side. So why is it that consumers or retail subscribers like you and I are not able to get into the lending, the kind of borrowing money to get into that space? Any guesses over here? And I would love. I'm again requesting. I know Abhishek is probably held up, which is why he's not able to come up on stage. But I would have loved to have heard Abhishek's opinion on this. But oh, thank you. I'm sorry. I hope I didn't pressurize you into joining us, Abhishek. I've been calling you up for a while, but welcome, Abhishek. And I would love to hear your opinion on, the commercial real estate space and why we do not see much of investments happening over there from retail consumers. Oh, but before that, if you could quickly introduce yourself, and I just realized I did not get Vinati to do her introduction. So sorry, Vinati. Totally cool. My profile says it all. That's okay. Which is what I shall do right now. Click on your profile and let people know who Binati Seth is. Meanwhile, Abhishek, could you, probably give a brief introduction and also let us know your thoughts on why commercial real estate is not that famous an investment instrument? Abhishek? I think this is what happens with most of the LinkedIn audio rooms these days, uh, which is glitches. But okay, so I will cover for Abhishek over here and kind of give you guys the answer. Um, but one reason is, of course, it's on the more expensive side. So the smallest ticket that you can possibly invest in a commercial real estate is going to be somewhere upwards of 5 crores, and not most Indians have that money to spend. Another reason, which is actually a bigger reason for why we do not get into commercial real estate, is because it is so complex getting in there. And if any of you are from Mumbai, I think you guys will agree wholeheartedly. When it comes to real estate, it's the broker who is the king, and they charge a preposterous amount of brokerage fees over there. Then, of course, you have the cut that the bank takes. You have the cut that, the middle, and there are n number of middlemen, n number of processes to go through, which is why it makes it so much more difficult for us to kind of invest into it. Uh, so, all right, we do have another person on stage, which is Siddharth. Uh, but Siddharth dropped off. Whoops. Okay, so that is one thing that which, if we had the concept of fractionalized ownership, it probably would have solved for one part of it. But the other part, which is having all of these middlemen, and by the way, fractionalized ownership of real estate is exactly what REIT is aiming to do in India. And I have to applaud the government's move for that, because it is really a revolutionary. They've actually taken a very data based approach to building this entire framework out. So kudos to the government on that. But that still does not solve for the middlemen. In fact, I just spoke unofficially to a few of my friends who were quite interested in the entire REIT, investing via REIT space, and I asked them that what is stopping you people. The number one reason was that, dude, it is too complex. Like, there are so many bureaucratic red tapes in the entire chain that it makes the entire process fruitless. It's like a mental hassle more than the economical value. It's more of the mental bandwidth that it takes up for you over there, which is where I feel blockchain has a huge, huge potential to actually help us in the second part of the problem. Of course, it can also help us with fractionalized ownership as well, but more on the second part of the problem, wherein you literally can reduce the number of middlemen to just the two entities who are involved in the sale and purchase of that particular fractional share. That is it. That's how simple it can make it. And a lot of there are a lot of chains that are doing this in the US. So what was the name of that? Okay, now I cannot find the link that I had opened. But there is a blockchain in the US which is doing exactly this for commercial real estate spaces. And the ticket sizes for you, and that is again on an ICO sort of a token. So the initial, for you to get into that particular blockchain network, the ticket sizes are as low as $500. And this picked up like, not like crazy, but it did pick up quite well when the government was giving out these stimulus checks to every household. So people who had like that extra cash with them, extra reserve with them, kind of just invested into that. And I was just reading about some of their reviews. They've made like yields of, they've had like over the last year and a half or so, they've had yields of up to 20% with people coming back to office now. There have also, and this kind of also solves the entire I wouldn't say problem, but the challenge that WeWork and other such co-working spaces had. Because now, if say I want to, suppose say I am a small business owner who probably needs a co-working space of sorts, I can also buy into that space using fractional ownership, and then lease it out to something like a WeWork, who just has to spend no longer on getting those long term leases. He can just do it for a short period of time. He will also start making profits. I don't know if they do have this in plan or not, but potentially he will also start making profits over there and generating that revenue on just renting the spaces to anyone who needs it for a much shorter duration. So that was like one very interesting concept that I found over there. And of course, everyone in the chain makes money. except for if you are the last person who's leasing it out from WeWork, in which case you're going to pay quite a bomb over there. But I found this entire concept like super amazing. $500 500 US dollars, if you convert it into Indian rupees, it's less than a lakh for us. In 85,000 we'd be able to get like good yields of about 10-20%, which I think is, even if you do adjust it, so say suppose say we do end up giving a 30% tax on that, and we also say there are like other sort of things in the way, someone else takes like some processing fees or something like that, we are still net going to be making, assuming that we get that 20% return, we're still net going to be making a gain on about 60% over there, which I thought was fabulous. I don't see any other asset class giving this on a steady basis to us. So this was kind of all that I had in mind to discuss today. If any of you, Vinati, over to you. I would just love to hear your opinions on this. And I would also love to invite others onto stage and ask their question, share their opinions as well. Over to you, Vinati.
So, like, honestly, my knowledge on real estate is pretty like dated, I would say. However, I'm seeing blockchain being used innovatively in the creator economy, whether it is a group of creators coming together, uh, launching NFTs and giving their investors a stake into their monetization strategies, being one very amazing development I've seen, because we've always said this as creators. The audience is our final ultimate judge.
Yeah.
With something like what I'm seeing online, people are actually putting money where this uh, weird concept, uh, where this concept was initially in the air. Like we just kept it between ourselves as like someone said rule. However, with I think NELK, NELK, this is the name of the group, Canadian creators who did this, and I was shook. People actually paid them for access in advance, and people are getting returns on that, which is such a short while to see a return. So I am still in the process of learning and understanding what this is, because it's so new. There's so much to learn, so much to understand, so much to comprehend. Because this is literally like this is blank slate, technically speaking. Where our
True.
imagination and our marketing goes, that's where we could take it, monetarily speaking. So yeah, that's where I'm at. Uh, I love that term you used, by the way. Crypto positive. I am crypto positive and crypto curious about everything. Like, try to understand what the technology is. And I think in the financial industry, we haven't really seen something of this sort. We have accepted dollar to be the dollar or rupee to be the rupee. This is the first
So true.
currency that we as a young, like we've all read Sapiens, right? Imagined
True.
currencies being imagined realities. So this is how I'm seeing this entire space. Whether we take this forward or not as something that is accepted in the long term. So yeah, it's fascinating.
You brought up a very interesting point, which was creators having a stake in the monetization opportunities that they have. And I think we should do an entire room on this, Vinati, because recently Spotify did put up their numbers, and a lot of creators came out saying that we do not even get like 1% of what Spotify is making. And with NFTs coming in place over there, and you can literally, and it's not just that you need to sell the entire rights to Spotify over there. You can break your, suppose say you are a songwriter, you can literally break your song down into multiple pieces and sell NFTs of those. Like, and we see this on like, this is a trend that has become possible thanks to Instagram and TikTok and short reels like there, where we literally pick out 15 seconds of the song that most reverberates with us, and every time someone uses it, imagine if you could potentially earn some revenue out of that through the NFT token that you have over there. I think we really need an entire room on this, Vinti, and I would love to set that up and co-host it with you. So anytime
Oh,
you are available for that.
doing this. She has an NFT of his songs, and she's gradually building a library. And with every song she releases, because there's so much public interest around it, just for the novelty of it all, people come, listen to her music, they see the next one, they see the next one, they see the next one. And she's getting paid for every single one of these playbacks, rather than what used to be the case, which is you have to wait for Spotify to throw you pittance.
Exactly.
So for creators, the fact that ownership is such a concrete concept with blockchain, you own it. And everybody has a stake in your success. Whether it's the companies that invest in you, whether it is your investors, whether it is your audience. This is the best part, right? Uh, we could see everything, right? There's full transparency, and you get paid for every single time somebody listens to it, somebody shares it, somebody talks about it. No, because reactionary content sometimes sells out so much more than the actual content. So from ownership perspectives, like this is such good news. If this develops the way that it is developing right now, as creators, we could finally be like, yes, dancing in money.
At least we get rewarded. If not dancing in money, we get rewarded for our efforts. So totally echo you over there, Vinti. Totally. All right, with that, I think we're ready to close our discussion for today. But I think I had some amazing, amazing takeaways, and I would definitely like to have a rehash of this discussion, take this discussion forward. And thank you, everyone, for joining us today. Loved the discussion and the comments that were coming in on through the video live as well. So thank you, everyone. This was an experiment for me. I quite liked the format, so I think I will be doing more of this. Uh, but sorry in advance, because I know it's going to be like a lot of posts coming out from my side, because you'll have two for each event. But yes, I do look forward to more of this, and I do look forward to hosting a lot more of you in these sessions. Have a good weekend, everyone, and take care. Bye bye.